Welcome to the 2021 International Insurance Society's Global Insurance Forum. My name is Josh Landau, President of the IIS. Like in years past, we are bringing together the industry's most influential and inspiring leaders to discuss the critical topics that are driving progress. This year, we are focusing on the insurance industry's outsized influence on the world's recovery, not just how we emerged from the pandemic, which has tragically claimed more than 4 million lives around the world, but also the historical catastrophes that have impacted the globe, the societal inequities that have been highlighted this past year, and the emerging risks associated with new technologies in an ever-increasingly connected world. We will look to the insurance industry through the lens of powering the recovery. How can the decisions we as an industry make influence how the world moves forward? Leaders from life and health, property and casualty, reinsurance, brokers, regulators, consultants, rating agencies, and technology will discuss their perspectives, initiatives, and challenges. This event would not be possible without our partners, whose support enables us to deliver on our mission to serve as the voice of the industry, providing a diverse and inclusive platform for both private and public stakeholders to promote resilience, drive innovation, stimulate market development, and provide education. I encourage you to take the time to visit the exhibit booths of our partners to take advantage of the thought leadership content there, which is second to none. My sincere thanks to Milliman, Swiss Re, RGA, BlackRock, FWD, Kyobo Life, Oliver Wyman, Principal, AM Best, Equinix, and Fairfax. And here at the IIS, we continue to evolve to reflect the changing environment. As part of the institutes, we're able to broaden our reach and provide our members even more connectivity and industry insights. Our Global Concerns Survey is now in its third year, and we've been able to continue our connections with you through our monthly Insights publication and industry-leading webinars throughout the year. We're also very excited about our newest partner, as the III became affiliated with the institutes this year. We are expanding our partnership with the Pacific Insurance Conference, another institutes affiliate, that will bring an Asia-focused one-day virtual conference in November. And we are launching a new education series for insurance board of directors starting this fall. The need for insurance industry board education that supplements internal training is a critical value-added program that the IIS will begin offering later this year. As boardrooms become increasingly diversified with new non-insurance professionals being selected for insurance boards who may not be as well versed in the insurance industry knowledge, the IIS will bridge that gap. As the industry evolves to meet the challenges of the global economy, so will we. And now I am proud to bring you the 2021 Global Insurance Forum, Powering Recovery. To kick off our conference, I'd like to introduce the Chairman Emeritus of the IIS, Chris Way, who recently completed a 3-year leadership role. I am personally grateful for Chris's guidance and leadership of these past 3 years, seeing us through transformative change and guiding us to the future. Welcome, Chris.
Hello. It's my honor to welcome you to the 2021 IIS Global Insurance Forum. The organizing committees worked very hard for months to put together an excellent program covering the most relevant topics affecting our industry, developed after speaking with many of our members. We're also coming together again in the midst of a stubborn global pandemic, an unprecedented event during most of our lifetimes, with material implications across all aspects of our industry. Now, COVID-19 has affected mortality and morbidity experienced globally. It's caused legal challenges on policy wordings, such as clarifications on business interruption cover in the UK, to affecting investment management, risk management, and of course, regulatory management, just to name a few. And despite the challenges, it's also a very unique opportunity for our industry to prove value and build trust with our customers and stakeholders, and embrace digitalization and innovation in response to emerging operational challenges. Now, I'm confident you'll agree that we can enjoy the program and I will take the opportunity to thank all of our amazing speakers for taking the time to contribute. And of course, the IIS team and organizing committee for the huge amount of time and effort to make this event possible. And it's also time for me to pass on the baton as the chairman of the executive committee of the IIS. It's been an incredible honor, and I love what the IIS represents as a non-lobbyist organization with a whole focus on improving the insurance industry, with the most international membership across more than 90 countries and across all sectors, including primary insurance, reinsurance, brokers, distributors, regulators, consultants, and subject matter experts. And it has been an eventful 3 years, with the IIS becoming affiliated with the institutes in 2018, strengthening its ability to deliver on its mission to provide a collaborative, open forum for all stakeholders for the advancements of the industry. And last year, in the midst of the pandemic, we pivoted to the first ever virtual Global Insurance Forum, which generated a profitable event with record level attendance of over 1,700 attendees from 90 plus countries. The IIS deployed an 11-week pandemic webinar series focused on the impact and response of the insurance industry for the COVID-19 global pandemic. The organization created an executive survey which benchmarks the key issues that are impacting the global insurance industry. And you will hear the 2021 results from Pete Miller, the CEO of the Institutes. We launched the IIS Executive Insights Program, which generates thought leadership from global experts on the core issues, as determined by the annual survey. Specifically, topics like cyber, regulation, innovation, the protection gap, resilience, and customer experience came top. And finally, we launched the Insights monthly publication, providing curated content from the IIS executive experts and industry thought leaders. So with Josh Landau appointed as president of IIS, I'm confident that with the continued support of the Institute, the IIS is poised for further expansion of its products and services and the continued development of an expanded network. And it's finally also my pleasure to welcome and announce the appointment of Andreas Berger, the CEO of Corporate Solutions at Swiss Re, as the incoming chair of the IIS Executive Council. I'm sure he will work with Josh to take the IIS to even greater heights. Thank you very much.
Thank you, Chris. We're excited for your next chapter and for your continued support of the IIS. I'm now pleased to introduce Pete Miller, the president and CEO of the Institutes, the parent company of the IIS, to present the results of our annual survey of global insurance industry leaders. This important industry pulse helps us shape our focus throughout the year, ensuring that we are addressing the most pressing and critical issues facing the industry. Welcome, Pete.
Thank you, Josh, and thanks as well to you, Chris. You've been a true asset to the International Insurance Society. Thank you for all your outstanding leadership. It is a pleasure to take part in the 2021 Global Insurance Forum. The conference theme of Powering Recovery reflects a pivotal moment for our industry. The previous 18 months have had an impact on every facet of our lives. We have seen our industry transform itself to not only survive, but in many ways accelerate our ability to respond to global challenges. Today, I'm pleased to announce the results of the 2021 Global Priority Survey, which surveyed nearly 10,000 global C-suite executives and senior leaders. One of our strengths at the Institutes is research. To that end, the Institute utilizes its research strengths to bring value to industry leaders. The survey is an initiative of the International Insurance Society, which draws from the strengths of the Institutes and several of our affiliated organizations, including the III, Insurance Thought Leadership, and the Pacific Insurance Conference. Respondents were asked to select their top 3 issues across 6 categories of external and internal threats: economic, political and legal, social and environmental, operational, technology and innovation, and business and financial. The insights gathered from global insurance executives forms the backbone of the agenda for the coming sessions. We believe insight always leads to opportunity. Our goal today is to provide insight based on your feedback that allows you to take the learnings and apply them in a way that not only impacts your organizations, but the industry we serve, and ultimately the broader public. Some of the survey findings may not surprise you, but I think some will. A copy of the survey is available to all participants on the International Insurance Society website, internationalinsurance.org. Today, I would like to highlight the key themes. Many of the top issues insurance executives are focused on addressing in 2021 reflect the concerns of senior leaders across various industries. Recovering from the COVID-19 pandemic, minimizing the threat of climate change, thriving amid rising social and political instability, and keeping up with technological advancements. However, feedback from the 2021 Global Priorities Survey highlights how each of these issues coincide in ways that uniquely affect the insurance industry. For example, the increasing severity and frequency of natural disasters and increasing climate risks have a clear effect on the industry's bottom line. However, managing customer expectations during these crises can result in frustration, as consumers may not fully understand how their insurance policy works and what it covers. This was especially true during the pandemic, when consumers turned to the insurance industry to help with business interruption caused by widespread lockdown. In addition, the speed of technological advancement has also changed the way consumers want to interact with insurers. The industry has put a great deal of focus on applying new technology solutions to the customer relationship to increase efficiency and enhance the customer experience. However, executives worry that the increased digital demands from consumers have left some legacy organizations in a position of catching up, and that the industry faces disruption from new entrants with better organized data and a stronger consumer orientation. It's no surprise then that competition from outside the insurance sector was the top business and financial threat perceived by executives in 2021. Technology isn't just paving the way for new entrants to disrupt the industry, it's also opening the door to cybercrime. 3/4 of executives said that cybersecurity was among the top 3 political and legal threats that their company was focused on addressing in 2021. This extends beyond the complexity of underwriting cyber coverage. Operationally, legacy systems are also a major concern, as the industry can be slow to update complex, decades-old databases hosting customer information, leaving the data stored within them vulnerable to hackers. Aging technology increases vulnerability to cybercrime, but the aging workforce is also a top concern that also comes with its own set of challenges. Survey respondents noted increasing retirements and a struggle to recruit new talent as a human capital problem. Respondents described an industry with an entrenched business model unable to quickly adapt to the digital world. This has resulted in stunted innovation, difficulty retaining talent, and an inability to connect with millennial and Gen Z customers. The issues facing insurance executives in 2021 are increasingly global in scope. Cybersecurity, climate change, pandemic recovery, competition for talent, data security, and competition from outside the insurance industry are not unique to any country or region. We have a great program in front of us. The Global Insurance Forum agenda synthesizes what global insurance leaders identified as their top priority with our industry's greatest thought leaders. My hope is that the following discussions will provide you with new insights and ideas, and that you'll be able to apply these learnings in an impactful way. This is going to be a great forum. I'd like to turn it back to Josh Landau, President of the International Insurance Society, to introduce our first panel of industry giants who will focus on the recovery playbook.
This is a pivotal moment for the insurance industry. In a time of profound and escalating risks, there is an urgent need for collective action to drive a sustainable global recovery. The insurance industry is central to powering this recovery, addressing the insecurity, instability, and socioeconomic inequalities which were widened by the effects of the global pandemic. By leveraging the insurance industry's financial strength, insurers can provide institutional investment focused on resiliency and technology, enhancing society's ability to recover more quickly. With an emphasis on digital transformation, insurers can employ risk management expertise to de-risk supply chains, insure intangible assets, design new products and delivery channels that meet changing customer needs, and set standards for the management and protection of data. Collectively, the insurance industry is positioned to strengthen society's resilience by reducing risk exposures and paving the way for inclusive growth and sustainable recovery. I'm pleased to introduce Mick Maloney of Oliver Wyman, who will moderate an exceptional panel of industry leaders to provide their views and insights as they navigate through the recovery. Welcome also to Dan Glazer, CEO of Marsh & McLennan, Roy Gorey, CEO of Manulife, and Christian Mumenthaler, CEO of Swiss Re. Thank you all for joining us today.
Good morning, everybody. My name is Mick Maloney. I'm a partner at Oliver Wyman, and I lead our insurance and asset management practice globally. I'm delighted to be joined this morning by Dan Glazer, President and CEO of Marsh & McLennan, Roy Gorey, President and CEO of Manulife, and Christian Mumenthaler, Group CEO of Swiss Re. Gentlemen, good morning, and thank you for being here.
Morning.
So our first question this morning is around this topic of powering recovery. And as everybody will have seen, that is the conference theme this year. And the insurance industry has obviously long had a key role in enabling economic growth by protecting individuals, businesses, and investors against losses. We're now seeing the confluence, I think, of an amplification of risks as a result of the pandemic, cyber attacks, climate change, and a rapidly evolving geopolitical landscape. And at the same time, much greater interconnectedness of systems as digitization and automation are accelerating. So our first question for our panelists this morning is, given this context, how do you think about the industry's role in powering a sustainable recovery, and what's top of mind for you and your organization? And Dan, maybe we can start with you, if that's okay.
Sure, thanks, Mick. I'd start by saying, insurance is a noble business, and that it's hard to think of an industry that does more to benefit society. And so I think there's a lot for us to feel good about. You listed a litany of additional perils and increasing levels of risk. But frankly, in my 40-year career, it's always been thus. There's always been things that are on the horizon that look dangerous, and we're one of society's ways of sensing those dangers. And so I'm also glad, Mick, that you said enabling in your remarks, because I think too often the industry's advertisements, the way we project ourselves, is about protection, and we overemphasize the protection. The reality is the enabling function. Nothing happens without insurance. There is no growth. There is no innovation. And so I think insurance gives us freedom. Not only freedom from the emotional and financial burdens of loss, but freedom for the taking of risk, innovation, growth. And I feel very good about the role that we play. I think increasingly what we need to do is marry advice with transfer. Because a lot of the issues that you just mentioned, a lot of the perils that you just mentioned, they're only insurable to a certain extent. Those risks have to be identified and mitigated and borne in part by society and by individual clients. And so I think, the more that we can build capability around risk as an industry, as opposed to overly focus on the insurance part of it. Insurance in a lot of ways is about us and about our industry. It's less about our clients. The clients are actually dealing with risk, and insurance is only one of the solutions to it. But I do think a lot of the efforts that we have as an industry have to be about resilience and building resilience, because losses are going to happen. And from that standpoint, it's how do you get on your feet quicker? How does insurance get you on your feet quicker? And a lot of that is about preparation and, I would say, advisory work as opposed to risk transfer work.
Thanks very much, Dan. Roy, I might ask you to comment next.
Yeah, well, thanks, Mick, and it's great to be here with you all today. Well, as you've stated, we are living in an incredibly challenging and complex world. And as Dan said, that's not been anything radically unusual for insurance companies like ours over the many decades. In fact, we've operated for 150 years, as has been the case for the other panelists' organizations. But the nuances of this environment are somewhat different to what we've seen in the past. And I think it's important to just acknowledge those challenges more specifically that we're grappling with. And to your point, how do we play a key role in facilitating the recovery through this period and beyond? And I think when we think about the fiscal and monetary policy challenges that we've all experienced over the last 18 months, they have significant implications, both in terms of interest rates, equity markets, inflation expectations, GDP outlooks, and so on and so forth. So there's certainly, a financial markets challenge associated with the recovery. I think the second big aspect of this pandemic is the physical impact, and it's been incredibly significant and it's been horrific. And I think it's important for us to pause and just acknowledge the humanitarian and health aspect of this crisis. Globally, there have been more than 200 million identified cases of COVID and nearly 4.6 million deaths. This is an incredible human tragedy and one that we will take many, many years to recover from. The other aspect that gets a little bit less attention is that of the mental health implication. And for me, this is very, very concerning, and I don't think it often gets as much attention as the other two. In Canada, those suffering from high levels of depression have more than doubled since the start of the pandemic. But less than half of those who have been diagnosed with mental health are actually accessing support services right now. And globally, we're seeing the number of mental health cases increase, very significantly. So this is really a very important and significant issue that we all need to be aware of, and we need to think through how we actually help navigate through. As Dan said, our industry plays an incredibly important role. And I think the pandemic has actually heightened the critical importance that insurance plays. I think people have come to realize that protecting your family and safeguarding them is a really important aspect of how you actually prepare for your own financial stability and the financial stability of your family. And I think we in the industry know this, but it's often something that we take a lot of time and effort to try to communicate the broader community about, and a pandemic has actually brought that to the fore. Now, just directly to your question around the recovery and powering sustainable recovery, the considerations in my mind that are really critical are, number one, the complete digitization of every aspect of our business. That is front and center for us and for many other organizations. And there's an incredible opportunity to eliminate the friction that, quite frankly, makes insurance an unattractive proposition sometimes, and therefore results in the exclusion of a lot of people. So I think this pandemic has created an opportunity to really digitize our businesses, and in doing so, really transform the way we operate. I think at the same time, normally we see a lot of inertia that prevents large-scale organizations from making change, and this pandemic has really shortcut that process. And I've often said to people that in the last 18 months, we've done more from a digitization perspective than we've done in the previous 18 years. The second aspect for me is around the changing nature of how work gets done. This looks at how we operate and how we organize ourselves, the flexible work practices that we have, the supply side diversity and resilience, and so on and so forth. Third for me is around public-private partnerships as they relate to infrastructure. We know this is actually front and center from a recovery perspective. Our industry can play a key role in helping to facilitate that investment and that transition. Income inequality is another key element, and the challenge for us is how do we make our products and solutions more available and affordable to all income groups. You couldn't talk about implications without mentioning climate change. Our role is to make sure that the recovery is a climate conscious recovery. We have to put a lot of effort into that. And then the final thing I'd say is that what we've seen through this pandemic is the value of diversification. I think we'd lost that over the last decade, and having any reliance in one market has been obviously incredibly challenging. And when you've got a diverse footprint, that actually provides greater resilience. And I think that's something that we're going to see much more of as we think about the recovery. Those would be some of my top of mind thoughts.
Thank you very much, Roy. And Christian, anything you're particularly focused on? Swiss Re obviously in a relatively unique position, straddling both life and P&C and having such a global footprint.
Yeah, I think a lot of good things have been said. So I'm just going to limit myself to 2 points. I think the first point, I won't say it as eloquently as Dan said it, but I'm also incredibly proud to work in the insurance space. And I think we are a business overall, an industry that is increasing resilience of the world. And we have paid out hundreds of billions in the last few years for natural catastrophes, through COVID. And we shouldn't forget that, all the help that this has, all the support this has given to humanity. Now, in that sense, and we know that societies that have insurance are much more resilient. They recover much quicker. There's much less impact to GDP, et cetera, et cetera. So in that context, maybe the second point would be this global protection gap we always talk about. We measure in the Swiss Re Institute, and it has further increased in 2020 by 6% to 1.4 trillion. So that's the gap between the economic loss and the insured loss in life and health, in life and health, in Nat Cat, in all lines of business. So I think that's something for us as an industry to think about, and it should be an obsession, in my view, to try to close that protection gap.
Excellent. Thank you very much. A great overview. So on this topic around resiliency, that we have a number of sessions over the course of the conference on the kind of linked theme of resiliency and technology, both of which obviously enhance society's ability to kind of recover and rebound from crisis. And clearly, the last 18 months, as you've kind of all mentioned in opening comments, there have I certainly identified a lot of areas where there are fragilities, whether it's supply chain disruptions, business interruption, cyber attacks, economic insecurity, and the issue that you've all touched on in terms of widening socioeconomic gaps. As you reflect on the lessons that we've learned, what are you seeing as the greatest opportunities for the industry, directly or indirectly, and what kind of new security should we be looking to provide going forward? And are we doing enough? And maybe Christian, I might ask you to comment on that one first.
Well, I think there's tons of learnings. Obviously, and I think we can be proud about it. The whole insurance industry went online from one day to the next, or from within few days, and that's quite a feat. And could continue to operate and pay claims and all of that. We could have client meetings online, as I did with Roy or Dan here, and continue to function. And I think that's a big learning going forward, because I don't think business travel will ever get back to the level it was before. And thanks God it won't, also for CO2 reasons. But I think more deeply, or maybe I take the macro view here, I think the sad part is big events like the pandemic, or even if you think cyber, they are entirely foreseeable. In 2007, the chief risk officers of 20 companies have put together a paper, what would happen if 1918 happened again? So it describes the pandemic. It actually says in the first sentence, it will happen again. It's just a question of time. It will probably happen in Asia. It will spread over the airlines. There was going to be interest rates will go down. Central banks will intervene. Stock markets will react. I mean, if you read it today, it's just absolutely fascinating, because it's from 2007. So very often my learning from the past is the experts know about the risks. Is very few risks that are totally off the screen. The experts know about the risk, but there's no proactive action being taken. And I think the big risks, like very big cyber, big terrorism, or big pandemic, are risks where we need partnerships with the states, because the way the states act now is not coordinated. It's ad hoc. Typically, huge amounts of money are freed up, but they don't know how to distribute. They don't know who needs it. And it's chaos, it's delay, and it's not effective. And I think this whole topic of pre-financing, of thinking about it in advance, and possibly working together with the insurance industry for these very big risks, which we know will happen one day, would be highly advisable. So I'm sometimes frustrated at the little progress we make here. I think a lot of people in the insurance industry are talking about it. And I think there could be a great collaboration for these extreme tail risks with the states and making societies much more resilient. And next time this happens, we're going to react much, much better. So this is my thoughts on this.
Thank you. And Roy, you mentioned this socioeconomic gap topic in your opening remarks. And anything top of mind for you in terms of what the industry needs to be doing there?
Well, I think there's a lot that we can do. So the short answer to your question is, can we be doing more? The answer is absolutely yes. And have we learned a lot from this crisis? Again, absolutely yes. There's a lot of learnings. And as Christian highlighted, we talk a lot about BCP or business continuity planning. And, the fact that we had to flick a switch and basically for our organization have 40,000 people working from home, 140,000 agents working remotely instantly, and for us to be able to continue without missing a beat largely is phenomenal. So I think focus on BCP is certainly something that we have to double down on. I would reinforce the importance of cybersecurity. I think that's come to the fore. We're digitizing our businesses at an increasing pace, and the hackers are getting more sophisticated. In fact, there's a hacker attack every 39 seconds, and cybercrime is up 600% due to the pandemic. So I really do believe that cybersecurity is an area that we're going to have to double down on and put much greater focus on. The third for me would be around global supply chains. And I think we're seeing a huge shift away from efficiency and cost benefits to resilience. I think we've pushed the envelope too far towards efficiency at the expense of resiliency. And I think that's a learning, and I think we're going to course correct. And then, Mick, to your point, I think the socioeconomic gaps and the issues associated with, I guess, the discrimination that exists in the world today is really front and center. And we need to really make sure that our products are more accessible to everyone. And this is a significant issue, and it's, if anything, been exaggerated during the pandemic. The reality is that 100 million people have been pushed back into poverty through this pandemic. And industrialized countries have spent up to 20% of their GDP on stimulus packages, whereas emerging markets, it's closer to 6%. And for the poorest countries, it's actually 2%. So we have to look at that honest reality and ask ourselves as an industry, what are we doing, or what can we do to really help close the income gaps that are being created, and if anything, exaggerated through this pandemic? And I think it comes to the products that we're offering, making them more affordable, easier to access, and simpler to understand. So that's certainly a big focus for us as well.
Thank you. Dan, comment from you?
I think Roy and Christian just made some pretty fabulous points. I mean, starting with the notion that resilience is not free. The world was in a hyper efficiency mode, and very little abilities to mitigate from potential losses or when losses occur. And so resilience is not just preparation, it is investing a bit today in a mode to be prepared for something that may not be an eventuality to you, but it may be. And so we have to learn how, risk-adjusted returns are more important than actual returns, right? Because companies that really push the envelope and have no ability to be resilient because they leave nothing on the table, should not be judged as being, the best in class. It should actually be questions around how prepared are you, that sort of thing. And, in terms of Christian's point around protection gaps, what industry has over $1 trillion of potential opportunity in front of it that would benefit not only society, but benefit the industry as well? And it's not just an emerging market phenomena. I mean, I look at the United States, a deep, mature insurance market, and you take a risk like flood, biblical risk like flood, been around forever, and tremendous levels of underinsurance with respect to flood in the United States. And then you take a more modern risk like cyber, as Roy was talking about. I mean, tremendous levels of underinsurance and under preparation in respect to cyber. And so, the age of risk is here. We're all going to be very busy in providing more product and trying to, help our clients in this way. Our clients get it. Some of them don't have the juice within their own firms to get the money that they need in order to create resilience. Like many risk managers have been kind of put in the box of insurance buyer as opposed to true risk manager within their firms. I mean, we did a survey recently, and 89% of the respondents to the survey cited emerging technologies as an important risk for their organization. And they were thinking about things like IoT or AI as an example, but only 9% of them said they felt that they were prepared and investing against that risk today. And so, and I'll just finalize, I'll just have final comments around PPP. I mean, there's certain things that the insurance industry can do. There's other things, but we don't have infinite capital. And so when you look at situations like potential cyber hurricane or some of the extreme effects of climate potentially, it really has to be governments and the industry acting together. And when I say together, well, what do we bring? We bring know-how. We bring the evaluation of risk. We bring great administrative and claims distribution capabilities, and we bring some capital. And what the government can bring is major convening authority, because they can get us all in a room and get us working on a problem. And they obviously have capital that can be very helpful as well. And so I do think working together, I've had many conversations with several governments with respect to future pandemic risk. And most political leaders say, listen, we're just dealing with the current pandemic right now. We'll worry about the next pandemic a little bit later. So there's not as much interest right now as I would hope that there would be.
Thanks, Dan. And Roy, maybe sticking with this idea of collective action and where the industry kind of needs collaboration and support from kind of government and policymakers to close some of the gaps that we've been talking about. Would you say a few words about that from your perspective? Obviously, you mentioned infrastructure and kind of socioeconomic gaps.
Yeah, well, I think the first thing to say is that resilience and the recovery is a team sport. It will not be a successful recovery if it's not one where everyone leans in and actually provides support to the outcomes. And that's going to require every single stakeholder to play a role. And that includes obviously governments, companies like ours, the markets more broadly, and the population in general. For me, a couple of thoughts that I have would be that of public and private partnerships on infrastructure. We know that infrastructure is an economic multiplier. Every $100 billion put into infrastructure yields as much as 1 million full-time jobs, in addition to the economic benefit of the infrastructure itself. But at the same time, about 70% of greenhouse gas emissions come from infrastructure. So I think the conundrum for us, in partnership with government and other stakeholders, is how do we make that investment in infrastructure one that's sustainable and economically valuable in the short to medium term, but at the same time is supportive of our broader goal of climate change and containment. So that's certainly something that I think we all need to very much focus on and partner against. I think the second area for me would be around education and awareness. And I think both Christian and Dan sort of talked to this. We need to do a better job together with government and other stakeholders to make or to increase awareness of the importance of insurance. But across a variety of fronts, the financial awareness in the general population is really very poor. A key stat that I'd highlight is that credit card debt has reached its highest point ever in the US. And nearly 40% of Americans at the same time can't afford a $400 emergency expense, let alone have enough to retire. So I think we need to do a much better job on education and awareness together with various other stakeholders. The third for me would be around digitization. Some governments in the world today still don't allow digital signatures. And we did see a bit of a pivot during the pandemic, but much, much more needs to be done to ensure that we are much more friendly in terms of our operations to consumers in the way that they want to operate. And look, the final thing I'd say is just around capital standards. Today, many regulatory capital regimes are quite punitive to longer term products that actually customers want and need. the reg environment from a capital perspective is pretty much geared towards short-term savings products, and that isn't necessarily providing the kind of protection that consumers need. And as we've seen in this crisis, we're really front and center. So I think that the partnership angle is one that is going to have to be a team sport, and it's going to require each stakeholder to come to the party and understand, I guess, what the broader play is rather than just their own perspective and their own interests.
Thank you, Ryan. And Christian, NatCat, flood, pandemic, where do reinsurers stop and governments begin?
Well, I think overall to this specific question, it's relatively clear. As soon as the capital of the insurance industry is not enough, so for things that are highly correlated across the world and where diversification breaks down, that's where you would need the government. If the diversification exists, then I think our business model can work extremely well. But to this whole question of governments, collective actions, etc., I wanted to bring in one of my favorite subject, which is behavioral sciences, because to me the most interesting development of the last 20 years in science is not AI and computer science, it's this behavioral science, which look at how people and people in the collective behave. And is very interesting, and it basically kills this notion that we're all rational being doing the right thing for us and optimizing, the logical side of life. The reality is that we all, as human beings, most of the time are in a mode where we're on autopilot, we're led by emotions and intuitions, and only occasionally do we do the extra efforts to think about something and go into this more painful mode of thinking about things. And if we do, then there's a question of where do we take action. And this is highly relevant for this protection gap, because a lot of people know they should buy insurance, but the act of buying insurance is highly unnatural, according to behavioral scientists, because you need to think about the future, about the risks, about negative things, which we don't like to do. And this has consequences, not just for the protection gap of individuals, it has consequences also on the behavior of any collective body like governments. So to bring a government, if you talk to governments and they say, isn't it logical that the next pandemic, we should do this and this and this, and we should work all together and have a system that's pre-agreed of distribution, they would all say yes in the meeting because it's logical. But then when it comes to the actual action, this whole principle of pre-financing versus post-financing, very difficult. Once the event has happened, very easy to get the funds. There's the emotion. You can look good by, giving out the money. Pre-financing, you'll be criticized. You're paying something for something that hasn't happened, et cetera, et cetera. So I think there's going to be, hopefully collective bodies like governments will make a step, will make more steps towards the logical thinking, the prearranged funding, and see insurance, as Dan has said, as a partner on multiple fronts, which we can do. And I think there's no problems we can't solve together.
Thanks very much. Yeah, I'd also like to think personally that I'm a huge Kahneman and Kahneman fan, but I'd like to think that there might be a role for the industry in helping to link and balance kind of health and economic consequences at once through the next pandemic as well, which is obviously a very difficult thing to do. But maybe moving on to this topic of digital transformation and opportunities. So we're obviously seeing a kind of an acceleration in the rate at which data has been digitized and automation applied. And in fact, interactions going online, which is something, Roy, you've kind of mentioned a couple of times, the changing nature of work, shifting where value is created, and obviously then kind of bringing with it new risks in the technology infrastructure. So the next question I'd appreciate your views on is, what are the most exciting developments from your perspective as you think about digital transformation? And where is it kind of changing business models most in your mind, and what do you see as kind of opportunities and exciting developments as a result? And Roy, I might ask you to start us if that's okay.
Yeah, sure. Thanks, Mick. Well, the first thing I'd say is that we've had various commentators use different letters to describe the nature of the pandemic recovery. We've heard about the V-shaped recovery, the W-shaped recovery, the K-shaped recovery, but from my perspective, the recovery is all about the letter D, and D is for digital. And as I said earlier, I think we have seen an incredible transformation of our industry. And the honest truth is our industry has been slow to recover and to digitize. in the way that the consumer has digitized over the last decade in particular. And one of the things that you normally see in a BAU environment is that there's this incredible inertia to keep doing things the way they've been done. People talk about the desire to digitize and do things differently and change, but there's incredible inertia to keep doing things the way that they've always been done. And that's true for the customer, but it's also true for employees as well. And I think with this environment that we've been in, because there were limited options, you couldn't fax your request in or basically go in person to see someone. It forced a fast tracking of the digitization agenda. And for our organization, we've invested more than $750 million over the last 3 years. And it's been phenomenally helpful for us in terms of the transformation of the key KPIs that help define how we actually operate. Our STP rates or straight through processing went pre-pandemic from 68% to 81%. Auto underwriting went from about 56% to now it's about 74%. And our digital claims are now north of 93%. So this has been a phenomenal shift that we've seen. And it's come because there were very few options available and people were really having to embrace these new ways of working. So that has been exciting for me. And I think it's really necessary. I think, again, the honest truth is, as much as we all agree that our industry is incredibly noble and we should all be very proud of what we do and the value we provide, I think the honest truth is, I don't think we've digitized at the pace that we've needed to, and we certainly haven't kept up with customers' demands and expectations. So I think this is an area where we're all going to have to continue to make the investments necessary to help further the agenda and ultimately to create much more value for customers and all other stakeholders like shareholders and employees. So, really great to see the progress and the work that's taken place so far, but I think there's still much more for us to do.
Thanks, Roy. Very interesting. And Christian, from Swiss Re's perspective in the reinsurance landscape, what are you seeing and most excited about?
Yeah, so Roy is obviously much closer to the practical aspects, but in my mind, what you might hear when you hear digitization is one or two shiny, sexy examples of somebody using AI and lots of data to do better underwriting. But to me, that's not the exciting bit. The exciting bit, I think, is more what Roy said. I think there's really an end-to-end digitization that's going to drive the cost lower. I mean, he didn't say it, but that's where we struggle, and that's what's going to help close the protection gap is if the costs are lower overall. So that's one thing. The second thing is the ease of doing business will increase, and that takes friction away from people, being underwritten, writing it, getting the claims. So I think there's lots to be done here. Also to integrate the insurance value chain in other value chains. So link it up. I mean, you heard about Amazon and others, just linking it to some of the products, making it more obvious to buy. And then probably, hopefully, the most exciting of all will be these services several people have mentioned already. So basically integrating risk awareness, risk mitigation into the product, giving feedback loops to drivers, for example, how to drive safer or property owners, of how they can minimize the risk. So signals back, continuous underwriting, these kind of things where you lower the risk for the consumer, actually. So I think digitization is a lot of really hard work. It's maybe not as sexy as what you read in a brochure, but it is hard work end to end. It has to be end to end. You need to get the full scale, not just in a little corner somewhere.
Thank you, Dan. I know this is a topic near and dear to your heart.
It strikes joy around opportunity and fear around disruption, and so both of those things are operating in my mind. What I'm excited about is, you just look at the insurtech landscape and the sheer number of companies, the globality of it, the capital moving into it. It used to be a smart person with a good idea, 20 years ago would say, if only I had capital. Well, you got a good idea, you'll get capital. We're in a world of super abundant capital. And so, there's many of those things which will go by the wayside, but actually it will spur a lot of innovation and development within our industry. Competition works. Incumbents are putting more money than ever into things like digitization and entrepreneurship, new product development, et cetera. And so I think that this is going to be excellent over time for our joint clients. I also think that digital capabilities are increasingly just going to be table stakes. It's not going to necessarily mean that a company is garnering share because of their digital capability. It's either, there's not going to be many analog companies left. And so in that age, like we're all going to digitize, it's a question of pace. And I think that it's a great equalizer. I mean, in a lot of ways, digitization makes a level playing field. It doesn't really matter all that much what size you are, how many countries you're necessarily in, how much infrastructure you have. It's not about that anymore. It's about client experience. It's about elegance, simplicity, delighting clients, having a more of a consumer mindset, even in the commercial space. All those things are coming. And some companies will get there a little bit faster than others. I think generally it favors distribution more broadly, and it favors newcomers. And when I say favors, I'm not thinking that I'm in a better position. I've got more competition coming. Most insurtech does not want to be a full stack insurance company. Most insurtech wants to be involved in solving a customer need on some basis. And so it is more distribution oriented. And I think that's where a lot of the action will be. And I think for all of us, the small SME market space and probably lower corporate as well, it's going to be very messy. There's going to be distributors, and whether that's intermediaries or MGAs that look like insurance companies, and there are going to be insurance companies that rebrand on some basis and have offerings which very much look like a non-insurance company offering, something brand new. We've seen the banks do that. We've seen healthcare companies do that. And I think we'll see insurers as well. And so it won't be that any company wins. It'll be that there's a vast market, an expanding market, and those that execute well will be able to garner a piece of it, but that it'll be messy, and that we'll all have to understand that in some places we're collaborators, in some places we're clients of each other, and in some places we're competitors, and we all just have to grow up and run our strategies the way we see fit.
Thanks, Dan. And Christian, I might frame up kind of an extension almost of the discussion and ask you to comment on it, and then Roy to do the same. I think this issue of disruption that Dan has been talking about, in a way, you can look at it through multiple lenses. I think there's obviously a set of private equity players that have become increasingly active in the space, whether it's kind of Apollo Athene or KKR or Blackstone. There's mainly, I would say, focused on within life and retirement on various offshore models and aggregating closed books and looking to kind of deploy long-term capital, often as a means of kind of feeding investment models in various different shapes and forms. Then there's some of the same private equity players, as Dan mentioned, kind of focused on kind of MGA roll-ups in the broker space, and then obviously the insurtechs, some of which have come of age, like Root and Lemonade and Hippo over the last period of time. And I guess the question is, as you think about this question of incumbents versus disruptors, what are the pieces of the space that you're watching most closely, and what's your view of the outlook?
Yeah, happy to comment on that, Mike. But I want to start by saying that I don't see any disruption. So I'm sensitive to the definition of words, but to me, disruption would mean somebody coming to the market with a unique IP that's protected and then scaling with network effects, passing by all the existing giants. Yeah? So I see absolutely nothing coming even close to that. And I think that's important to state that. And if you disagree, then please, I'd be interested to hear the names. So what you see is a lot of innovation. So people looking at different aspects of the value chain and being better, and that's the normal competition, but there's nothing that other people couldn't copy. So the private equity people are just very smart. They go into existing companies that maybe most would find not that exciting, because they're typically not very digitized, but they have lots of assets. So they work on the asset side, they work on the leverage, They will work on the cost side. So basic things, maybe, which the company should have done before, but they work very hard on the cost side. They optimize the reinsurance structure and don't have any hobby projects anymore, for example. So it's very stringent, logical approach, which makes them highly effective in what they're doing. In the insurtech space, as I said, nothing disruptive, but lots of new ideas in all over the value chain. Dan knows the space very well, so he's absolutely right. It's mostly in the places where you don't need a carrier. So it's focusing on risk services, risk advisory, claim services, or the contact to the client. Absolutely right. I think that's where a lot of value is generated and created. So you see people all over, but what it means for the incumbents is they're relatively safe. You, as an incumbent, you would probably look at those and say, what do I buy? What do I copy? So to a certain extent, it's a vibrant space. It's very positive for everybody. And then you can decide whether you want to acquire some of these talents in-house and improve your value chain element here, or whether the knowledge that they have is not big enough, the time spent and the advantage they have not big enough so that you can actually copy the good ideas, because very little is actually protected. So I'm very positive about the insurtech space. I'm just saying it's very difficult. And then those few who try to be pure play insurance companies, they find it relatively hard. I cannot speak for them, but I'm just saying, I think what people find very hard is that the notion that you have in other industries, that you come in and you have a better product and you offer it at 20% discount, and then everybody will jump to you, and the masses, millions of people will come automatically to you because they hear from colleagues, and therefore you're going to be huge and scale and rich, is not working. Why is it not working? It's not working because of this behavioral economics we talked about before. People are not surfing the internet in the evening. They're not excited to look for the next insurance product. And so, and if they have to, if they're forced to sort of buy, they know they have to, they will default to the big brands. So I think human psychology is in the way of, massive scale progress for new brand names that are non-existent and massively favor the incumbent. And I'm not sure everybody has found out that so far, but that's certainly my observation. So I'd be very optimistic for the incumbents. And also another phenomenon we don't talk enough about, you might want to go into that when it comes to big tech, they already get the juicy part of the value chain. Because if you want to, as the insurtechs want, if you want to acquire a client through Google, they have an auction process to access their clients, and this makes the policy 2 to 3 times more expensive to acquire through Google than it does through a physical agent. That's how incredible it is. This whole craziness in the insurtech sector has driven these prices up so much. And I've once heard, it's not confirmed, that the insurance industry is actually one of the biggest profit drivers for these big tech companies. That's how keen people are to access it. So I think it is more useful to think in terms of the value chain and the different elements and who's playing what role in the value chain. And as Dan says, I think that might also rearrange slightly with technology.
Thank you, Christian. Roy, from your perspective, and in particular, I'd be interested in a comment, if you would, on this question of financial inequality, and you touched on this question of financial wellness and whether there are models out there you kind of hold a lot of hope for in terms of getting to mass market consumers in particular.
Yeah, so a couple of thoughts. Well, firstly, I do agree with a lot of what Christian said, but not everything. And there's probably some different perspectives, and he and I normally agree on most things, but I probably put a different twist on some of the different aspects of what he commented on. I do agree that there are some challenges and some big hurdles for some of these disruptors to really be incredibly effective. But at the same time, I think the biggest mistake that we could make is to discount how readily able are the disruptors to, disrupt our industry. I think that would be a mistake, to be complacent and to think that they can't disrupt us. And again, if I think back at many of the other disruptions that have really transformed industries over time, you look at a complacent set of incumbents that were just so comfortable with the barriers to entry that basically forced them to not make the necessary changes to advance the agenda of customer focus. And that led to their demise. I mean, again, Uber wouldn't be around today if taxi companies provided an awesome experience for customers, and if they were reliable and allowed you to get confidence that when you called them, that they'd show up. I guess the next point that I'd make is that I think competition is great and it forces us to get better. And I think this is true for competition within our industry, but it's also true for competition from potential external competitors. Our goal as a company is to leverage the best capabilities from any industry and bring them to the fore to make us better. But as I said earlier, I think if we had an honest look in the mirror, we would admit that our industry hasn't been the most innovative historically. Our application processes are manual and very long. The underwriting processes are often very complex. The claims process is also very difficult. I think that's the honest look in the mirror. And have we gotten better? I think we have, but I don't think we're at the point where we can say we are awesome. And for me, that is what drives us. And that's where many of the innovations that we're seeing is really coming to challenge the friction that exists in our processes today. I think at the same time, customers' expectations are also changing very rapidly. They might have accepted a very manual, cumbersome process a decade or two ago, but today consumers are demanding instant, they're demanding intuitive, they're demanding simple. And we need to really build digital capabilities that lead to better customer satisfaction. So the thing that we're incredibly passionate about is the focus around Net Promoter Score and making sure that every single experience that a customer has is one that is as good as they could get from a digital disruptor. And in some cases, we're building that. In other cases, we're looking at what the disruptors are doing, either in our industry or other industries, and we're partnering with them. We're not too proud to say that, hey, if they do a great thing, we will either copy or we will partner with them and bring their capabilities into our organization. So for me, I think that is the real critical juncture that we're at as an industry. And I think it's about embracing the need to be dramatically better. And if we don't do that, I think we run the risk that we can be more and more disruptive. But at the same time, I wouldn't discount, to Christian's point, the importance of having a strong brand that's been around for 150 years. I think consumers will need to know that 30, 40 years from now, you're going to pay a life claim. And I don't know whether you'd have that confidence if you were a startup organization that didn't have that history. So there's certainly a lot going for our industry that we can leverage, but I would hate for that to turn into complacency and for that to stop the agenda to radically transform our business and do it at a pace that is consistent with what the customers are demanding. We have a lot of catching up to do. And as I said, I think we can be proud of the work we've done recently, but the truth is we've got much more to do.
You're right. Dan, I did just want to give you a chance to comment on the big tech aspect of this in particular, and anything sure. you thought was interesting there.
Sure. Well, I'll start. First of all, I'm really enjoying being part of this panel. So I want to thank both Roy and Christian. I'm sitting here learning and soaking things in. So thanks for that. I mean, I think there's an awful lot of new companies out there, and there's a lot of marketing going on. So oftentimes when I'm sitting with my team, I have a basic question: who's bearing the risk? Who's going to pay the losses? Because there's an awful lot of folks who are projecting that that's what they are, but no, that's not what they are. What they really are is an intermediary or an MGA with a little bit of capital or skin in the game, but it's not really that they're an insurance company. There's somebody else who's backing them up and is the risk bearer, and have somebody who's been on both sides of the aisle. I can say there's tremendous differences in companies and in management between essentially advisory businesses, MGA style companies, and actual capital providers. And so that to me is where the rubber meets the road. Are you going to be the company that pays the bulk of the losses or not? And if you're not, well, okay, then you're more of an intermediary than you are. And you might be a good company, you might be able to develop things, but ultimately you're more of an intermediary. And so I think the full stack model is very interesting, the newfound full stack. But in a lot of ways, I view that more as an MGA style model as opposed to an insurance company model. It's marketed as insurance company, but the reality in a lot of it is MGA. In terms of big tech, I think you'd rather collaborate than compete. I think that there are, when I think about big tech, there's very big differences. I mean, things like Microsoft, in my mind, Apple, they're manufacturers. They're makers of product. They're sellers of product. On the other hand, I look at an Amazon or a Google or a Facebook as essentially intermediaries, distributors, putting two parties together. And that's essentially what we do. We've got the advisory capability, but I'm not, I believe that can get created or bought, right? So ultimately, I do think that there is the potential for large scale involvement in our industry by big tech, because big tech has to continue to grow. I mean, if these guys are going up into space, it's because they think they need another planet for growth, right? So ultimately, I don't think any industry is immune. And I do think that there's certain political organizations in the United States, in Europe, as an example, who have just said, this is close to monopolistic in some areas. And so therefore, are we going to get the right levels of competition in the future, based upon the present design? But I'd leave that to another day. I think that there's big opportunities for the industry. I do think that affinity is changing very rapidly. I mean, we announced not long ago that we did a program with Amazon that would allow small sellers on Amazon to easily get product liability insurance. And I can tell you, it's growing very fast. And so, I think that there will be other opportunities for the industry to essentially get involved with big tech. But I would say, it's sort of like getting involved with a porcupine. You got to be very careful in terms of that level of involvement.
Thank you, Dan. So maybe pivoting here, our final question for the panelists is really that while the environment is fluid and dynamic, in fact, many of the things we've talked about, I think, mean that there's a very bright potential future for the industry. And it would be interesting to hear each of your thoughts in closing on what you're most excited about as you look out over the next 18 to 24 months or so. And maybe we'll start with Roy, if that's okay.
Yeah, thanks, Mick. Well, a couple of things that excite me about the next 18 to 24 months. I think the first thing to say is that we're still in the midst of this pandemic, and there are many countries in the world where we're seeing COVID case counts has increased quite significantly. The death rates are still increasing. In Indonesia, for example, there was a day last week where they had more than 40,000 cases on just one day alone. So the reality is, whilst in some parts of the world, North America, Europe, we're seeing a bit of a light at the end of the tunnel with COVID case counts decreasing, very high vaccination rates. That's not the case everywhere in the world. And we have an important role to play to help our customers, to help our employees, to help the communities that we work with, to ensure that they navigate this pandemic as best they can. And as both Christian and Dan said earlier, this is a very noble cause. There aren't too many industries that can put their hand up and say, we're here to help and we're going to make lives better and help people through a very difficult time. And as tragic as the situation is, that makes me very, very proud, and it's something that excites me, as tragic as the environment is. So I would certainly put that up there. I think the second thing that excites me is that we have an opportunity to change the paradigms about how people think about our industry. I talked a lot about digitization, and I think that this is a pivot point for our industry, and one that we're really excited to take advantage of. And I think this is a once in a lifetime opportunity to transform the way an older industry has operated to becoming more vibrant, more energetic, and one that is much more in sync with how customers want to engage. And to engage in a way that's more of a partnership approach. So I think that digitization agenda is an exciting one. The third thing I'd say is, and this would just mirror Christian's comments and Dan's comments earlier, the penetration that exists today for products that we provide is really low. And this is a tremendous opportunity to really help not only garner greater penetration, but actually help consumers understand the value of the products that we offer, and to do that in a way that makes it much simpler and easier for people to engage with us they'd probably be three top of mind thought processes that are exciting for me as I think about the next year and a half too.
Thank you very much, Roy. Christian?
Yeah, I think very similar to Roy. I think one of the challenges we have as CEOs of global businesses is really this disparity across the globe. It's very hard to generalize, and the mood is very different in these different parts. So you have some parts of Asia that had never had it, but they realize now it will become endemic. So one way or the other, they need to do all the work that the other countries have already done, hopefully with much less victims, but it's ahead of them. Some countries are in the midst of it, and then some countries are towards the end of it. That's how it feels. And where it's towards the end of it, I feel a lot of, and that's the point that makes me excited. There was a bit of a hibernation mode, I have to say. I mean, the industry went through it very well, and everybody was working from home and all of that. But if I think about the activity that we could see in terms of risk analysis, risk services, buying, selling entities, doing big deals, doing innovations, there was a bit of a hibernation for 2 years, and that's a bit of a pent-up demand. I can clearly see, leadership teams coming back and saying, "Okay, now what's next? Now all the things we wanted to do on digitization, innovation, all of that has to come now." And so I would foresee with the economic recovery boom, I would also foresee a boom a bit in the insurance industry, with a lot of thinking that has happened over the last 2 years, and this being now unleashed. So I think this is going to be, it's my hypothesis, it's going to be a very interesting, 2 or 3 years now, with lots of change in the industry.
Excellent. Dan?
Yeah, I don't think the world is facing many significant challenges, and there's really no easy answers. When you think about whether it's climate-related effects, cybersecurity, pandemic, these are global issues, and we don't have strong global institutions to tackle them. We generally have national solutions against global problems. And so you get a tremendous amount of variability, as we've seen, variability in approach and variability in outcomes. So it's going to be tough for a while. It's an extraordinary moment for the world. We're coming off a tough year and a half, and the end is not in sight in many places. And so, and it's one of those things that scientists say is, as long as there's a large amount of unvaccinated population, the virus will continue to mutate and variants will continue to develop. And so, we're in this potential cycle of new variants and concern with new variants and different things. But the world has proven to be resilient. And whether it's governments, companies, individuals, we've all taken a blow. And we're still coming, and so in a lot of ways, we've proven that the human condition, yes, is struggle, but it's also advancement. And so when I look out over the next few years, there's been very few times in my career where I had a view that, this year will definitely be better than last year, and next year should almost certainly be better than this year. And so I do think that we have a kind of a roaring 20s element of pent-up demand and energy on a global basis. I mean, what I'm excited about personally and professionally is a world with more gratitude, a world with more freedom, and a world with more growth and opportunity. And I do see that is going to happen. Now, whether it happens now, next year, or the year after, I can't really tell, but I do believe that the human condition is one of innovation and growth.
Gentlemen, a fascinating discussion, and thank you all for such thoughtful contributions. Certainly, from my position, I'm sitting here with a lot of excitement about where all of our parts of the industry are headed over the next 2, 3, 4 years, despite challenges. So, on my own behalf and on behalf of the IIS, thank you very much for your time this morning, and thank you.
Thank you very much, Mick. Take care.
Thank
Yes, guys. Roy, Dan, all the best. See you, hopefully, physically soon.
Hopefully. Take care.
Thank you, Mick, for leading a really great session, and thanks to our panelists, Dan, Roy, and Christian, for your insights and wisdom as we begin to normalize and plot a path forward. I hope you enjoyed the session as much as I did. We'll take a quick break, and I encourage you to visit the IIS partner exhibitor booths to take advantage of the robust content available to you, as well as an ability to connect via the chat feature.